No trade.
No, I was looking at Euro USD. I took a trade, maybe it was Friday. Last trade I took was Euro USD and it was like on the 5 minute and it was off the fair value gap that happened in London. And that one won. Um, but I haven't taken any well, yesterday it was a holiday.
Yeah.
So today is the first day of the market. And Euro USD, I was kind of I was sort of I was looking at the fair value gap that it was at, and it actually went up from there, but I was thinking it might go to there's a daily. So I was looking at that one that you have on your chart, the 4 hour,
Yeah.
but I was kind of wondering if it might go down to the daily below. So I mean, that one's like high resistance liquidity,
Yeah.
but the daily one below it,
The
um,
yeah, this one.
yeah,
Yeah. Yeah. It
because there's also low resistance liquidity that's forming above. So,
yeah. Yeah. We have quite a lot of low resistance liquidities above. So that's
uh,
one of the reason why, as much as price can still come down if it wants to, but once it's ready to go up, it will literally rally above these areas explosively. And something else I'm gonna show you is so let me open. So right here, this is all right, I need to take this off, go to 4 hour. Yeah, so now there's just been a lot of manipulation with dollar and euro as well. Now, if you go to dollar, you can see that dollar has this wicks here that came up and mitigated this fair value gap. And if you put a line across that high,
mhm.
this is the line, and then go to 4 hour, you see that there's no wicks there. The wick
Oh,
the wick is only present on daily, but when you go to any lower time frame, you can't find it.
uh-huh,
So that's just manipulation. So that I think this is just an intentional manipulation because now it's gonna keep a lot of traders on the pedestal of are we gonna come up here to run out this low resistance or has it already been taken out? Because it seems like it's been taken out on daily, but then
uh-huh.
when you go to your 4 hour, you basically can't find the wicks that took those liquidity.
Oh,
So
wow.
yeah, so the only thing I did with the price action is now you can see there's something we call SMT is from ICT. So what it is when two pairs, two maybe correlating pairs, either they are oppositely correlated or inversely correlated. One of them is basically creating a higher high, and then the other one is failing to create a higher high. That
Mm,
would be an SMT. But in this case, this is oppositely correlated pairs. And this is dollar and this is euro below. And dollar here, you can see this high right here. Dollar created a high and then created this low, broke this structure on 4 hour, and then rallied to the upside, failed to take liquidity from here and dropped to the downside, breaking another 4 hour low. And on euro, on the other hand, it created a low, it created a high. So here you can see this high here is the same as this low, and then this low is the same as this high. And then this here is the same as this price action. The same time, it was created the same time, basically. Now you can see that this one failed to take liquidity above and it dropped, and this one took liquidity below and it broke structure. So right here is SMT, and this is showing us that euro is the one with momentum and dollar is the weak one.
mm,
So now we're not going to just jump in because price came into the fair value gap. We're still going to wait for multiple confirmation, like 15 minutes break of structure. And for me personally, before I take this trade, I'll wait for multiple confirmations. The first one is coming into the fair value gap, I want to see 15 minutes break of structure to the upside. And after that break of structure, I'm still not going to get in. I'll wait again for another confirmation, which is 3 minutes or 5 minutes break of structure to the upside before I will now look for a buy on euro. And the reason I'm doing it that way is because of all this price action, all this liquidity here.